All right, I think we are on. We're going to have another great day, another great topic. Wait a couple of seconds to have people come in. Thank you for joining me while we are waiting. My name is Mike Patel. The channel here, as you may know, it's Home Savvy Central. I talk about homeowners, home sellers, what their concerns are, what the trends are. So we're going to talk about a big trend going on right now. And the trend is why are home prices up, but the number of sales are down and the buyers not buying, even though the inventory is increasing. So the title is why home prices are up, even as sales crash. Now, home prices are not crashing, but the number of home sales is crashing. So we're going to analyze that. And today I have a special guest with me. He was a guest before a few months back, and he's back again to talk about things. His market is from Denver. It's a different market than in Southern California where I'm at. So I want to introduce you Jeremy Kane with Exp Realty in the Denver, Colorado area. Welcome, Jeremy, again. Tell us about yourself and a little bit about your market in the Denver area.
Yeah, thanks, Mike, for having me again. This is fun to kind of jam out and just talk about the market and how it's going. I'm the son of a realtor, second-generation real estate agent, been in for about 12 years. A lot of good years in real estate.
Right.
And, you know, kind of the steady increase of home prices and everything, the amazing interest rates and stuff that we saw through the COVID years. And now things are a little bit different. And so as an agent, it's just all about knowing the market and knowing exactly what's going on. So I'm kind of excited to dive into this, as we've had a big change in our market, and our prices are not going up drastically. They're actually kind of stagnated, as you know, I talked about here in Denver, but nationwide they're up a little bit as well, which is kind of a misnomer because of the inventory that you mentioned. So in Denver, we're working really hard for our sellers. We're working, you know, I work Northern Colorado as well. So Denver to Northern Colorado, about 150-mile radius. But it's very much a time as an agent to dive into marketing and how are we actually bringing the value to our clients, because it's not just throw it up on the MLS anymore. We're, you know, leveraging video, we're marketing properties. I mean, I remember a time, I'm sure you do too, in Southern California, where you couldn't even get the printers or the flyers off the printer before it was under contract.
Yeah, we didn't have to do any flyers. I mean, why even do a flyer? Because it's sold by the time it's printed out, you know.
Yeah, that's where we got to.
I wanted to ask you, you said, wanted to ask you, Southern California, I'll just give you a brief 10 seconds. Southern California is still very active. Home prices are not jumping, but they're not dropping. And depending on the price range, anything under 1.5 million, you know, the medium home price in Orange County is about 1.2 million. So anything near 1.2 is flying out the door. You get multiple offers, or they sell within 3 to 4 weeks. Our days on market, that means how long it takes to sell a home, has gone up. It's anywhere from 45 to 60 days, depending on what part of Orange County you're in. So relatively speaking, still very active. Homes are selling, buyers are buying, sellers are kind of getting their price. But if you're way overpriced, they're not selling. And the market over 2.5 is a totally different market. So we want to talk about that, because that's where our luxury market starts. It used to be $1 million is luxury, but now in Orange County, not me, but generally speaking, if you're not over 2.5, it's not really a luxury home, because for $1 million, I'm going to list a house in 2 months. His house is 1,400 square feet, 3 bedrooms, 2 bath, built in 1965. We're going to list it for $1 million. So you don't get a whole lot for $1 million. So what's happening in Denver in general? What happened 6 months ago, and where do you see it going next 6 months compared to what's happening USA? You know, if you want to just
Yeah, I think the biggest piece here is that the sellers are just a little bit behind the mark, right? They're, you know, we always say the sellers are the last to find out about the market, right?
Right.
And we've seen that, and there's people that, you know, owned through the COVID years and got a massive appreciation spike, and maybe lost a little bit of that, you know, monopoly money, so to speak, in equity as the market shifted. But the real problem comes if they bought in 22, 23 on emotion, kind of on that high, and the market didn't just keep going, right? Because when we were going 100,000 over and so on, our average purchase price about 750. I'd say our luxury starts about 1.5 here. But people were doing so much to get the bid, right? To win the bid, that we always said, like, hey, this is going to take a little bit of time to catch up, you
Right.
know, and once that train stopped, it stopped.
Right.
So
Yeah. Yeah.
that time to catch up never came. And so if you're breaking even, after a year, 2, 3 years, even in this market, you're good, especially after fees and those kind of things that come into play in a real estate transaction. So it's kind of a big deal, right? It's a change. We got so used to, trying a house out for a couple of years, and if it didn't
Right.
work out, well,
Yeah.
you're 50, 60, $100,000 in the positive, and you go on to the next one, right?
Right.
You
Right.
try again.
Yeah.
Where now we're back to a real, like, hold investment strategy.
Mm-hmm.
And as a result, I've always talked to my clients about, hey, if something changes in this market, just make sure you can rent it out for,
Yeah.
as close to that mortgage payment as you can, if you have to move, if, something comes up.
Right. Right. What's happening as far as, do you see, when I say you in general, have you seen in the Denver area, northern Colorado that you mentioned, homeowners struggling with their payments? Because we have a crisis right now. Number one crisis is the insurance skyrocketing and the property tax skyrocketing. And I just did a video a couple of weeks ago, and it's got hundreds, lots and lots of views. And a lot of sellers are struggling because they thought they bought a house and the payment was $3,000, principal, interest, tax, insurance. Now, 2 years later, the payment's $4,000 a month because property tax and insurance skyrocketed, which never happened. So what's the general status on that happening? Because nationwide, this is a crisis happening in a big way.
Yep. And I mean, obviously, you guys had the fires last January. We have wildfires here in our hills as well that affect our insurance, but we also have hail.
Okay.
And so there's fire and there's hail. So Colorado is one of those kind of next tier, not necessarily Florida or LA, but the next tier of insurance problems, right? Where people are doing.
Yeah.
And so that's, kind of, that's happening here. And it's really hitting those townhome entry level, condos hard, because say, well, the HOA covers this. Well, the HOA gets a premium increase and they're jacking prices way up. Looks like we have a question there.
Yeah. So do you want to answer that? And then I'll answer too. Why don't you answer and then I'll give you mine. Thanks, Karen, for the question. Jeremy, go ahead. Then I'll answer it as well.
Absolutely. It's actually illegal for them to discriminate. If you were 100 years old, you could still get a 30-year fixed rate mortgage. The honest truth is, you're paying something off. You're building, your legacy, so to speak. And certainly if that's what your budget allows, a 30-year fixed mortgage is a perfect tool, and something that is, I have a lot of friends up in Canada. They don't have that 30-year fixed tool. So as opposed to renting, sure, you're paying someone's mortgage. I don't care how old you are. If you're paying for a house, you're paying someone's mortgage or someone's retirement.
Yeah.
So, I mean, I certainly would get into homeownership at 60 for sure.
Yeah. Hey, Karen, you took me back 25 years. When I started this business 25 years ago, I had a couple call me. I was brand new. It was my third or fourth sale. Mr. and Mrs. Ford, I'll never forget them. Mr. Ford was 90 years old. Mrs. Ford was 82 years old. They wanted to buy a house with a VA loan. So I sold a house to Mr. and Mrs. Ford when he was 90 years old and got him a VA loan, 30-year VA loan. So to answer your question, I cannot answer for you, but in general, doesn't matter if you're 60, 70, 80. If you need a house, if you can afford a house, if you can maintain the payments, principal, insurance, tax, and interest, if you have association, if you can maintain those, if you can anticipate that, hey, there might be a property tax increase, insurance increase, home ownership increase, if you can maintain those for the next 7, 8 years, 10 years, then I would absolutely buy it. The second thing you have to remember is that if you, in this market, and when I say this market, July, August 2025, chances are maybe in 2 or 3 years, prices may drop. So if you're going to buy for long term, I would absolutely buy it. But if you're going to buy, when I say you in general, if somebody's going to buy for 2 or 3 years, like they did 2021, 22, let's buy it and then move, and they still make profit. But when you buy short term, you may take a loss. So yes, buy if you're long term, and if you're comfortable, ready, willing, and able to buy, then absolutely buy it. I sold a house at 90 years old. I was in touch with them for another 15 years. Then he passed away. So he passed away at 99. But Mrs. Ford, she passed away when she was 95. I sold them the house at 82. So I was in touch with them for 13 years. And then her daughter, it was in a trust, and her daughter sold that house. So, hopefully that answers your question. If you have any specific question, talk to a realtor, talk to a lender, or I can hook you up with somebody depending on where you are. So feel free to direct message me, or feel free to ask another question here.
Yep. And I would add to that, that the key point in what Mike just said is making sure you're comfortable, right? If you are comfortable for the next 5 years as this kind of economy sorts out and the real estate might go down, it might go up, like there's no reason not to buy.
Exactly.
If you're, short timing it at a place and you're not, don't want to live in the city, town for long, then renting is certainly an option. One of the biggest things that's frustrating me now is we have so much social media and realtors saying, renting is, more expensive than buying.
Right.
That's not necessarily the case.
Right.
Right.
Yep.
For short term, when you take out the wealth building and the long-term wealth effect of owning a home, renting could be cheaper. Right.
Yeah.
And so, and that's a key point in that. If you're solid, stable, make sure you're getting a house that, you will be able to navigate and care for. Don't get too big, that kind of stuff.
Right.
As we get older in life, you can do what you want to do, but if you can't service the house and you can't take care of it, it's, starts to affect the investment.
Exactly.
So,
right. Yep. Okay. So the next thing is, and Karen, thank you for watching. Thank you. If you're there, if you have any further questions, we'd be glad to answer. In the meantime, for those of you watching right now, or watch a lot of my viewers watch the recording, I wanted to find out in your area, because you may be in Texas or Florida or Denver or wherever, San Diego, have you noticed more homes for sale in your neighborhood, but they're not selling, but the prices are still high? If you've noticed that, or if you see any changes in the market, let us know. Comment below and say, hey, I'm from wherever, and this is what's happening. We'd like to find out. And me as a host, and I'm sure Jeremy, we talk about real estate all the time. We get asked questions all the time. So when we know more about local market from the right sources, we would like to keep up to date no matter where it is, because we get questions from all over the place, So, feel free to like and comment any of the questions you have. We are here to answer your questions. So I want to get back into the what's happening on the market, because that's our topic is. What is happening in the market? So Jeremy, what I'm going to do is I'm going to start I'm going to present a slide here, or a website. Let's see, it's from realtor.com. It says here, April 2025 monthly housing market trends report. Can you see that?
Yes.
I only have one screen, so I'm going to read further. Let me see here. There you go. Okay, you can see it. So this report shows that the inventory of homes for sale rose 30% year over year, which means from April 2024 to 2025, it has gone up 30%, which is pretty significant. This is nationwide. So obviously in your area, it might not have gone up that much, or in some areas, it might be 40-45%. Like in some areas in Florida, it's up 60-70% higher than last year. The total number of unsold homes, including those under contract, was up 20% compared with last year. Pending home sales, homes under contract fell 3.2% compared with last year, as a renewed climb in mortgage rates weighed on buyers. And then newly listed homes increased 9.2% from a year ago. And the last one I'm going to read here is that homes spent a median of 50 days on the market, 4 months more than a year ago. That's the biggest number. So what does that last statement tell you, Jeremy, in general?
I think in general, with the way the market is and the throughout this article, they're bouncing back on the interest rates and that kind of deal. I think that's, where information is traveling so much quicker, and everyone's worried about interest rates and all the things.
Right.
The honest truth is that sellers are getting a little bit more willing to provide concessions and buy downs and things like that. And so I think, honestly, as a whole, we focus on these interest rates a little bit too much, because they're variable, right?
Right.
Better credit, maybe better interest rate, worse credit, down payment assistance, those kind of things. Those all come into play. And so when we talk about rate, there's likely an opportunity for the seller to provide a concession and buy down the rate. If you get a $20,000, concession on a place, on the average purchase price out there in Orange County, you can buy down the rate a point, maybe a point and a half, even depending on kind of what's going on. So that's something that's more beneficial than a $50,000 price reduction is a $50,000 concession.
Can you, Jeremy, can you explain what a 2-to-1 buy down is? I know what it is, but some of the viewers may not know what that means. Could you explain that a little bit?
Yep. So temporary buy downs, 2-1, 3-2-1, 1-0, all these things are basically buy downs. You can get a temporary buy down. So the client will have to approve at, the standard rate. Say the standard rate is 6.5, which it's close to now. For the first year of a 2-1 buy down, the rate's going to be 4.5. After 12 months, the rate will go up to 5.5 and then 6.5. So two years and a 1% buy down each of those years, and it increases. And so that's great and all. The truth is that seller concession will go into an escrow account. The cool part about temporary buy downs is if the rates do go down and you refinance, you maintain that escrow account that goes towards your principal on a refinance. In the event you do a permanent buy down, say you buy it down a point or, 3/4 of a point or whatever, that money's gone. So it kind of gives you a little bit of a difference. But I will caution you, a lot of those date the rate, marry the home, people out there were getting pretty cliche for a while. Well, it turns out the rate's, been up for a lot longer than anyone has expected it to be. And so these temporary buy downs, we just need to make sure that as professionals, we're advising our client on what happens if the rates do not go down and you don't have that opportunity, because you better be ready to pay the full blown, interest rate come, the end of that temporary buy down.
Right. Okay, cool. So going back to mortgage rates, I know we talked about mortgage rates. So we know that the inventory has gone up. We know that the prices are still going up. Sellers want the higher price. Number of home sales are significantly down, right? Because it's taking 40, 50, 60 more days to sell a home. So the question is, the mortgage rates have come down slightly. And you mentioned that, mortgage rates is not really a big deal, but it's become a big deal because if I'm a buyer, first time home buyer, and I can qualify at 6%, but I cannot qualify at 6.8%. So how much of an impact do you think the mortgage rate is? If it drops to, let's say, 6.4% or 6%, do you see a lot of sales? So what's going to happen if the rates do drop significantly? Let's say 6%, which I don't think is going to get to 6% this year, let alone 6.5. But let's say it goes down to 6%. What do you see happening in the market overall in general?
Yeah, I think if we see a 5 in front of it, we'll see a kind of a rush to the market. Mortgage applications are up week over week for many, many weeks in a row. That's not saying much because we did start at the basement at one point, but that is significant. And every time it drops a little bit, it has gone down the last week or so based on the jobs report last week and that kind of stuff. And we're lower than we've been in 10 months, I think now. But every time it ticks down, we see a little bit more, action because everybody's so quick to, hear it. But I would just encourage people, if you're approved at, 6% for a home that you want, well, go keep an eye out for that price point and, look at something that's been on the market for 7, 10, 24 days, whatever it is. And maybe you do get a full price offer in there with a concession that gets your rate bought down into that area. It would have to be a permanent buy down if you're only approved for, $1 million on 6%.
Right.
But, it's certainly an opportunity. Sellers are willing to wheel and deal. Some sellers have to sell. A lot of people are in a position to kind of take that loss, and a lot of people aren't. So it just kind of depends on the situation and, feeling out that process.
Right. Cool. Okay. So now the other thing is, I've noticed, and I'm sure you notice also, especially states in Texas, and I don't know about Denver. I think Denver also, Florida, Denver. A lot of the builders seem to have overbuilt, and because the buyers stopped buying because the rates went up and the prices went up and the property taxes went up, insurance went up, they slowed down. So from what I'm hearing and from the report that I've read and talking to other bloggers or live stream YouTubers, I'm hearing there's a lot of builders with a lot of inventory. They are giving significant amount of incentives, up to 75,000 in incentives. I just talked to a guest last week, Tammy. She was a guest of mine, and she said there's a town. I forgot the name of the town. There's new home builders over there, and there's a lot of homes there, 800,000 range, and the builders are giving $75,000 in terms of closing cost, buying down the HOAs for a year, repairs or upgrades. That's significant. What's happening in Denver area, or what do you think is happening with the new homes? And we'll look at the slide as well. I'll put it up while you explain that.
Yeah, I mean, that's one of the areas that's been hit the hardest, right? These builders have inventory just like we do, start to stack up, and the cost of that is huge. So our incentives are very similar. I recently actually sold a resale in a community that still was building, and that was quite the process. But we ended up pricing the home, about. I mean, it was nice because the builder had a comp that we could use, but the builders, they're getting their money, right? They also own the lending company, so they're getting money on the mortgages and that kind of stuff. But, essentially what we did was list slightly below, but I marketed that we could get an appraisal based on these sales up to this amount if you did want to, come in at 650, say, and get a $30,000 buy down. Right. And so then we were essentially matching what the builder was doing, or we just listed it a little bit lower, which was still a win. My clients bought it, I think they sold it 14 months after they bought it, and they still, made money.
Right.
So builders are doing that. And the challenge comes in when you're selling in a resale community. But the builders have great incentives right now. You just have to go through their lender.
Yeah. Yeah. And the reason they give incentives, obviously, here's a report from a National Association of Home Builders. This came out July 24th, 2025, pretty recent. New home sales hold steady at a relatively tepid level. Challenging affordability conditions, elevated interest rates, and economic uncertainty continue to act as headwinds on the housing sector as many potential buyers continue to stay on the sidelines. Sales of newly built single-family homes edged 0.6 higher in June, rising to a seasonally adjusted annual rate of 627,000, according to newly released data from the U.S. Department of Housing and Urban Development and the U.S. Census Bureau. The past 2 months have been the slowest sales pace since October of last year, as mortgage rates averaged above 6.8%. The last thing I want to read out is new home sales remained flat last month, highlighting persistent weakness in the housing market despite seasonal exceptions for growth. So I don't know if this is concerning, but to me it's a little bit concerning because on one hand, people are buying, on one hand, prices are going up, but everywhere you look, the number of home sales are down. As far as the volume goes, the units of home sales are down. The prices are staying high, and that's puzzling because I'm sure, Jeremy, you get asked the same question, is when are the home prices coming down? That's very, very common question, but they're not coming down. And we've been asked this question since 2021. And I know a lot of buyers, my own buyers, have been waiting and waiting and waiting. Now they're marketed out. They can't afford it. So it's kind of puzzling to see that there's a lot of inventory. There's a lot of homes not selling. It's taking 3, 4, 5, 6, 7 months to sell a home. The prices are holding. And we're going to talk about why prices are holding. But what's making the prices hold, Jeremy, in your opinion or data that you've seen?
Yeah, I mean, obviously the sellers are determining the price. The home is only worth what the buyer's willing to buy it for and the seller's willing to sell it for. And sometimes we forget about that. And so I think that's the expectation of that exactly, not understanding that, home prices can fall if the supply outweighs the demand, and not understanding the balance between supply and demand.
Right.
But I think the biggest thing is information is traveling so quickly. So every month we're sending our clients updated, values, snapshot values, those kind of things.
Right.
And so, when it was good, it was good.
Mm-hmm.
And you're like, hey, you just bought this house last year and it's $100,000 more than it was.
Yep.
But
Yep.
now that it's not so good, some people have pulled off on those services and don't send those reports as much because they're not standing behind their clients. But I
Mm-hmm.
certainly do. I think our job as real estate agents are to advise through that. And I think
Right.
sellers are holding on to the value. I think, migration rates are still, a thing, and people are moving and buyers are buying and sellers are selling.
Right.
But it's just, it depends, because now what we're seeing is a phenomenon when people need that money out of the market, they're pulling
Right.
it, they're just, slashing the price. I recently had a property that I sold. It's a little townhome in Denver. It's still on the market, actually. When we went to market, there was a property listed at $695. There's a property listed at $675 that we thought we were a little better than. Well, the $695 sold for $640, and the $675 sold for $607. And I
Wow.
called the
What a
agents. I was
drop.
like,
Yeah.
what happened?
Yeah.
Like, you're killing
Yeah.
me. And they said, well,
Right.
they're investors. They just needed their money out of it.
Yep. A lot of
Right. So,
investors. And what has happened is the investors, when they bought the house, let's say their mortgage payment is 3,000, right? And the
yeah.
rent is 3,000. What happened now, especially Denver, Florida, Texas, Utah, Nevada, California, insurance skyrocketed, property tax skyrocketed. If it's a newer home, HOA skyrocketed. So all of a sudden, that $3,000 a month mortgage and 3,000 a month rent don't match because the mortgage is now 4,000 or 3,500 or 5,000. So these investors are going negative. So instead of losing money, they're putting the properties out. But here's the fact. Look at these. And I know you said that sellers are hanging on to the price or whatever, but here's what's happening at the same time. There's so many properties on the market. It's taking so long to sell, but here's a trap for sellers. If you're thinking about selling or if you consider selling, keep this in mind. In the last year or so, there's been a 47% increase in deal listings, which means there's a lot of canceled listings and expired listings out there. They put it up for sale for 400,000 or 450 or whatever. It does not sell after 6 months. Of course, who do they blame? Agents. Oh, you agents don't do anything, but it's the price, right? Because there's hundreds on hundreds of homes for sale in your area. You still want the price that was here in 2022, 23, 24, but the market has slowed down a little bit. So you can't ask for more. You got to ask for the market price. That's one thing that's happening. The other thing that's happening if you're a seller is the sellers with equity are not under pressure yet. And that's one of the reasons they're hanging on to the price. Because even if I list my house at, let's say, $500,000, and if I cannot sell it, even though I have to sell because my mortgage went up or I'm going to lose a job or economy doesn't look good, I have plenty of equity. I bought the house for $300,000 10 years ago. Now it's worth 500. So if I can't sell, I'm fine. I have equity. But guess what's happening to that equity? It's going down every few months, every quarter in certain areas because the prices are slightly dropping. The cost of maintaining your home is increasing. When you put it up for sale, if you have to remodel or upgrade, it's going to cost you more. When you buy another house, it's going to cost you more. And also, depending on when you bought, like me, I bought my house 25 years ago. If I sell today, I'm going to have a significant amount of capital gains tax. So all these factors are going to affect you when you do really sell. So if I was a seller today, I would look at all those factors and say, should I sell now or wait? Should I sell at market value or should I be, quote, wanting more? If it's worth 500, I want 525 because market's still active. So all these you have to think about. And the last thing I want to mention about the seller mindset is that if you don't need to sell, don't list just to see what happens because it ain't going to sell. In the previous hot market, you could say, hey, I want 425. Let's try 450. If I get it, you could get that in 21, 22, 23. Not anymore. So I think for you to be a home seller in today's market, you have to be very diligent of what's happening in your local market. So let us know what's happening in your market. Would you sell now? Would you not sell? Or are the prices going up or down? I mean, do you have any comments on that, Jeremy? What do you think as far as sellers' mindset goes moving on?
Yeah, I think you hit the nail on the head with, sellers that don't have to sell, right? And they're just putting it out there. I
Right.
think the biggest mistake that people are making right now is just, I've heard sellers say it, so many times, oh, well, we can just start here. And if we have to come down, we'll come down. The market price is the market price. And I'm getting a little bit more straightforward with, my conversations and saying, hey, look, overpricing is going to cost you pretty much double what you overpriced it as.
Right.
The days on market add up, then people, then we drop into someone's price point and they offer, lower, or they need the concessions. So pricing it right out of the gate is huge. The list price isn't really, doesn't determine what the offer prices are going to be.
Right.
The data of the sold properties and the comparable properties does. So, on the flip side of that, as an agent, I'm looking at it and saying, okay, well, I can get an appraisal at this amount, right? I see the comps. I have the data that shows that we can get an appraisal at this amount. Right. So I'm not rushing to slash the price by any means. But overpricing is almost a real problem.
Right. Okay.
But slashing the price every 2 weeks or whatever is also a problem, because you're just chasing the bottom of the market.
Right. So one of the things I want to talk about, because that probably, it's potentially our topic, is that even though why are home prices staying high with the slowness of home sales? We've got a significantly low amount of homes sold, right? In 2023, we sold almost 6.5 million homes. When we say, nationwide, this year is going to be around 4 million. Last year it was around 4 million, right? So if the question was, why are home prices still staying higher despite the slow sales, high inventory, it should be the opposite. But I want to talk about 3 or 4 points and we can discuss this. The first point is, even though inventory is higher than last year, 30%, 40%, it's still significantly low compared to the norm, right? The normal is about 6 months of inventory, but we're still down nationwide. We are still at historic lows. That's one of the biggest reasons, right? Do you agree with that, or is that a fact? Or
I don't necessarily agree with six months of inventory being the norm.
Okay.
Because I think that our buyer dynamics changed, right? Average home buyer's age is going up. We have multi-generational living. We have a lot of people that are migrating and using things like furnish finders and things like that, where they're, temporary housing. So I think the 6-month inventory is based on a fairly stagnant population, with the norm. And so I think there's less buyers out there. There's less qualified buyers, right? You talk about affordability.
Yeah.
When are my kids going to be able to afford a house, without my assistance? My generation didn't have a ton of assistance from our parents to do those things. Now, if I don't help my kids, with that piece, including college and weddings for my daughters and all of that, they're going to have a different start than I had, right? I bought my first house when I was 19. Okay. My dad helped me as a real estate agent. He made money on the deal. But, that was back when the seller could pay the down payment and all the things. And now it's not that way. So I think that the living experience is a little bit different than the normal days of 6 months of inventory being a balanced market. Because I just think we're doing things, we're getting creative here when it comes to structure and living.
Right. Yeah. What about, let me see, what was the second reason here? What about the mortgage rate lock with the sellers? A lot of sellers have 2, 3, 4%, right? What they call the golden cuffs, right?
Yeah. Is
that affecting sellers not hanging on to the price because they want as much price as they want, because they don't want to let go of this 3% and say, if I can't sell, if I don't get this price, why should I sell and let go my 3% and buy something at 6%, 7%? How valid is that viewpoint?
I think there's some mentality there that's accurate, but it drives me crazy when I see the person that's locked into a 2.5% interest rate and they're holding on to that, but they're running up their credit card because, they can't do it at a 35% interest rate. Right. So you got to look at your entire debt and your blended interest rate to see if a 6.5% interest rate is actually worse for you. Right. But I also think that, that's kind of two-sided, right? I can't leave my 3% interest rate for a 6%, but can you really afford that? Will your lifestyle, like, we're not the best at savings. We wiped out our COVID savings faster than, anything. Our debt's rising, our savings is dropping.
Mm-hmm.
And so it might not just be, I don't want to
Yeah.
go, but I can't go. Right. And if we're talking about this, and the people that were, that are really stuck are the people that were first time home buyers, and they've got so used to that lifestyle, and they're traveling, they're doing all of that. So they're actually trying to move up. So go up in value in addition to the raised, appreciation of homes, and they're doubling their interest rate, which has a huge
Mm-hmm.
effect. So I don't know if it's want to. I think a lot of times it can't.
They just can't.
And so whether it's a mentality of golden handcuffs or true handcuffs, or you're just like, okay, well, this is what we got to make work. We got to share rooms. We got to do different things.
Well, I did couple of videos, and I mentioned the same thing. A lot of sellers, in fact, I did a video about 3 weeks ago, and it's titled, one of the whole topic was, sellers cannot afford to sell their home, nor can they afford to keep their home. And here's what it means. A lot of the sellers, and let's take example of Florida, okay? Florida, we had a hurricane disaster, so a lot of the homes got damaged. We had that Charmaine condo complex crash, and due to that, it triggered HOA increases significantly and insurance increases significantly. So what's happening is, if I was a seller in Florida, I bought the house 25 years ago, I'm a senior, I'm a fixed income. Now I have hurricane damage. I've been paying every year for the last 15 years like clockwork, $2,000 a month, never been late in my life. All of a sudden, I get a letter, hey, there's a $20,000 assessment fee on this condo complex. You have to pay upfront, number one. Your HOA is going from 300 to 600. So that's a number one shocker. Then I get a property tax increase of $400 a month increase. Then I get an insurance increase of another $400. So all of a sudden, me as a senior, fixed income, my $2,000 payment went to $3,000. I cannot afford to make that payments. So I have to sell. I can't sell it because I have damage on my houses. And the buyer's going, hey, you pay the assessment fee. I'm not going to pay, because a lot of escrows are canceling in Florida because of the assessment fee. Seller saying, I'm not paying, and the buyer says, I'm not going to pay, but it has to be paid. So on one hand, they can't sell, and then they cannot afford to keep that house because they can't afford the payment. So we have a disaster happening in a lot of states, especially Texas also happening. Florida is happening. A lot of cities. I don't know what's happening
That's
in
why
Denver.
Cape Coral, Florida is
Cape Coral, yep,
as
a
the
lot of
worst
damages.
market.
So the issue I was talking about is this: a lot of the sellers cannot sell, nor can they keep their home. The other thing is, they cannot buy the house. Like if I'm a senior, now I'm behind on payments because I can't afford it, right? So my credit is ruined, and I can't sell this house because I can't afford to buy another house because my rate's 4%. I refinance, now it's 7%. So forget buying another one. At the same time, my credit is shot. Nobody's going to give me a loan. And even if I don't want to buy and say, you know what, why don't I go rent? I can't afford the rents because rents are sky high.
Yeah.
So,
because ultimately that's
exactly,
that's the cycle, because it takes a little bit to catch up. But truthfully, our rents, I saw something the other day that's, kind of going back to your waiting. If you're waiting for a 7.5, a 6% interest rate or a 5.5% interest rate because the rates are 7.5, you're paying 7.5% interest to somebody. It's just your landlord, right?
Yeah.
Because that mortgage is being paid, and it's just a pass through, right? When the taxes go up, when the interest rates go up, when everything goes up, you're just passing it right on to the tenants, and therefore rents are, up as well. So in that case, I mean, yeah, it's a rough go, and those HOAs, those attached communities, are at the forefront of being affected by it.
Yeah. So some of these things are affecting, and I know Florida is one of the states. I think the highest drop in price year over year is Florida. There's about 5 cities that are the highest price drop. If you take the top 100 cities with the most price drops, I think 5 of them are from Florida, including Cape Cod.
Cape Coral.
Cape Coral. I'm sorry. Yeah. Cape Cod is in Boston or whatever, right? Cape Coral.
I think Cape Cod's okay.
Yeah. Cape Cod. Yeah. It's on my to-do, what do you call, bucket list to go there. I don't know why, but I just like the name. So I want to go see Cape Cod. So
check it out.
Check it out. Yeah. Yeah. So,
for sure.
What about in the last 3-4 years that we've seen the market, it's been crazy. That all the norms have been broken. Are we coming back to the seasonal? Like, they say, oh yeah, Thanksgiving is going to slow down, December is going to slow down. Are we still with those spikes, or those spikes are gone anymore? We don't have to worry about those spikes. I mean, sellers are going to do what they're going to do when they can do.
Yeah, I mean, I think our market will always be a little seasonal. We're not in Southern California where the
Yeah.
worst that happens is June gloom.
Yeah. Yeah.
But certainly, I mean, it's just a little bit less, as we head out. July is historically a very slow month in our market because everybody's, camping and doing the things. Our spring starts in February. Super Bowl weekend one year was the highest, best, chances to sell and all the things. So I think that, yeah, seasonality does take effect, especially in our market,
Right.
where it's traditionally slower. However, what that does is it kind of leads to a suppression of inventory. At the holidays, we have a ton of expireds, people take off, and then we typically see those trickle back to the market in the spring.
Right.
Coming to a head in June by the time everybody's listed,
Right.
then our inventory starts to, stable off and goes from there.
Right. Right. Okay. All right. Yeah, so we don't know what's going to happen. John has been, saying that the quarter four, his comment was that in quarter four, what's going to happen in quarter four, it may be the same. At the same time, he's suggesting that if the rates go down, the buyer activity will go up. And then I responded to him, hey, yeah, if the rates go down, activity will go up, but then wouldn't the prices go up too? Because now they have multiple offers, and wouldn't that increase the price? What do you think is going to
Yeah,
happen?
that's kind of the deal. And if there's multiple offers, certainly I don't think we'll see in this instance, hundreds of thousands of dollars over asking and that kind of stuff. So I don't know if the prices are going to be drastically affected like they were during the
Right.
pandemic. But yeah, if the rates go down, you're going to have more buyers. There's going to be more competition. Sellers are going to be less likely
Right.
to provide that buy down. That's the secret. Is if you are thinking about buying and you're waiting for that to happen, and rates to drop 50 basis points, as you see on the comment, well, then what's going to happen?
Right. Right.
Well, you could get the 50 basis points off right now with a seller that's been on the market for 10 days,
Right.
to pay for a concession.
Right. Right. Okay. Yeah. Hey, John, thanks for the comment. He's saying that first the rates may come down, and let's see what happens in quarter four. Then he made the comment that crypto profits will be reinvested elsewhere. So, do you see crypto thing affecting real estate or purchases from crypto, buying real estate with crypto? Where do you see that going? And I know it's off topic, but since we have the comment, any knowledge on that?
It's certainly an interesting dynamic there, right? You have a lot of overnight millionaires. You have a lot of people that are, full on board with crypto. I think those guys are buying investment properties, maybe in other countries and things like that. I know some of the guys that I know that did really well with crypto are, buying little vacation rentals and things like that in other countries.
Right.
And they travel a lot for sure. But I don't necessarily see crypto, as it kind of creeps in, and Fannie and Freddie are starting to recognize it as, a suitable form of income. Certainly it's going to have its effect. But I also don't think that large majority, that many people within the population took advantage of the crypto boom.
Okay. So, and not to get political here, but I know that the Trump administration is pushing crypto in some ways for real estate. And the and like I said, I'm not getting political here. I'm just reiterating what's happening and see what the effect is. And they've also the Trump administration wants the Fannie Mae and Freddie Mac to become public. It used to be public, went private. Now they want it to go public. So I'm not sure if there's any connection between Fannie Mae, Freddie Mac, and the crypto and the whole housing market. So any idea of what's going on there, or does it have any effect or any correlation there?
It's just more money in the market, right?
How? I don't understand.
Ultimately, I know people are not going to like this, but crypto is just a stock at this point.
It's going to become that way, right?
Yeah. That's what it is. It's a stock. People have always come in and out of the stock market when,
Mhm.
Bond market, stock market, all the things. The bond market obviously has a major effect on the housing market.
Right,
And
right.
so I think that there's something to take note there. If it's recognized as, reserves and suitable income, which is kind of what they're pushing on Fannie and Freddie to do, which they've kind of started talking about, then yeah, it's going to have an effect.
Mhm.
Or do I see all the crypto overnight millionaires coming and dumping all of their money into real estate ever? Probably not.
Mhm.
Um, but purchasing a house here and there to live in, those
Yeah,
things,
those things. Yeah,
investment
nothing.
properties
Yeah,
here
not
for sure.
no mass buying and purchasing or anything.
Right. Right.
Yeah,
Diversification for sure.
exactly. Okay. So now we talked about the seller mindset. Let's talk about a little bit about why buyers are not buying. Let's get into the buyer's mindset. Some of the points I noted, and we can talk about it. I'll read through. There's five points. I'm going to read through it. We can discuss on some of those. Why buyers aren't buying? Because we talked about it. Rates have dropped. There's a lot of inventory out there, so buyers have a lot of choice. There's no multiple offers, so why aren't they buying? So a couple of things I wrote down. Well, 5 things. I'll read through it. Mortgage rates make monthly payments unaffordable. That's one reason. Confusion over headlines versus reality. Wow. Many buyers are frozen. On one hand, market's booming. On the other hand, inventory is increasing. So the buyers are confused. Okay. Rising property taxes and insurance compound the cost. Number 4, some are waiting for a crash that hasn't come. That's very true. And number 5, builders are offering deals, but skepticism remains. So out of these 5, what 2 would you pick, Jeremy, if you, as a consumer or as a realtor or as a professional, what 2 reasons would you pick why buyers aren't buying, in your
I think
opinion?
the biggest one, and kind of a conglomerate of all 5 of those, is the uncertainty in the economic market.
Okay.
Right? They don't know whether it's an uncertainty in the market and the financial side of things, or uncertainty in where they want to live or where they're going to have their careers or that kind of stuff.
Mm-hmm.
Going back to work, having, loss of remote opportunities and jobs and things like that. So I think the bottom line is, when it's an uncertain, political climate, economic climate, people are a little bit slower to make these, going back to the beginning, 30-year commitments.
Right, right. I think I totally agree with you. And here's why I think I agree with you. And of course, I agree with you is the uncertainty. But here's where the uncertainty is coming from. If you look at the COVID days, people had a lot of money. There was COVID money, checks were given. Now, if you look at the credit cards nationwide, we've never had, for the first time in history, we've seen so much credit card debt. Everybody's credit cards are full. Savings accounts are very low, historically low. Credit cards are historically full. People are not spending. There's signs of unemployment coming. There has been a lot of mass deportations, and a lot of the farming and a lot of the companies are laying off people. If you look at big trucking companies, as an example, in Florida, a big trucking company with 400 employees, right, are shutting down. And some of it has to do with mass deportation. Some of it has to do with sky high insurance claims. So people, buyers are also uncertain whether they'll have a job or not. Microsoft has laid off. Apple's going to lay off. Walmart is going to lay off. So they're hearing things, and this is combined to headlines, right? So there is a lot of uncertainty. They think the rates are going to drop, so they're going to buy at that time. But we've been saying that for 3 years. The buyers think the prices are going to come down significantly, then they'll buy. But we've been hearing that for the last 4 years. So yes, there's a lot of uncertainty. The market is not stable right now. The economy is not stable right now. We can see the confusion out there. At least I'm seeing a lot of confusion when I talk to a lot of people. When I talk to you, Jeremy, when I talk to a lot of other bloggers, when I read reports, there's uncertainty out there. So obviously, if I'm going to buy a rental property, I may have to rethink and buy as an investor. At the same time, if I'm a buyer thinking of buying, like the lady just asked a question, forgot her name, I'm sorry. Karen just asked a question: should I buy right now at 60 years or more? Maybe she's uncertain about certain things. That's why they're asking the question: is the market going to crash? What will happen when I turn 70? We don't know. That shows uncertainty. So yeah, that could be Builders are offering up to 20, 30, 40, $50,000. Why are not buyers lined up to go buy?
Mm-hmm. Yeah, I mean, I think there's the uncertainty piece. I think there's the lack of affordability. Just because they're offering $50,000 doesn't mean you can afford a $5,000 mortgage payment, right?
Which could get up to 6,000, by the way, in 2 years, right?
Yeah.
With the way property taxes, and
especially in
insurance.
those metro districts and things that they're doing now with the new build. So
Yeah.
I think that there's certainly that confusion, and this is why consulting a real estate professional, working through that piece. The truth is, how's the market? Is it a good time to buy? It depends on your situation. 100%.
100%.
Depends on what's going on. Is
It
the
depends.
market good? How's the market? Depends, right? It just depends on your specific hyperlocal, and financial standing.
And when you say situation, now you have to take it in two formats. Number one, what's your situation right now? Oh yeah, I got 50,000 down. I have a great job. My wife has a great job. We're okay. We're okay. Now the situation, where would you be in 3 years? If you bought a house, 50,000 down, your mortgage $3,000, you've got 3 or 4 or 5 months in reserve. Great. What happens after 3 years when your mortgage jumps to 4,000 because your property tax went up, your insurance went up, your HOA went up, and one of you just lost a job? How's the situation at that time? Can you buy a house and survive with one income, number one? Or can you survive after 3 years if your mortgage payment went up to 3,000, from 3,000 to 3,500 or 4,000? And or what if the rates go up, your mortgage goes up, and one of you loses a job? Can you survive that? If you can survive that, I'd buy right now. If I'm not sure after 3 years, I may hold off, personally speaking.
And I think that's important, and only the answers, and we can talk as real estate professionals to kind of give you that lowdown,
right?
Because if any agent tells you that the rates are going to be lower next year, or in 2 years, or the prices are going to start going back up, they don't know, because we don't know right now.
We don't know.
It's just it's a wild, the stock market seems like it's doing good, but everything's expensive. The cost of living is expensive. Everything is costing more money. And so as we see, it's lining up. I mean, my good friend Joshua Smith talks about this all the time, and he's talking about the American consumer being in a financially worse position now than they've ever been in, right? Because everything's so expensive. And so he's been in it. He was in it 2007, 2008. To this day, he thinks that our consumers and our, homeowners, buyers, sellers are in a worse financial position than they were, in the great financial crisis.
Guess what? What I'm hearing, of course, nothing politics here. Things are expensive. They're going to get more expensive because guess what? Tariffs are just about to hit, that were placed in January, February, March. They're about to hit, and we're seeing those tariffs come in. So things are going to get worse before they get better as far as the prices goes. Consumer goods, consumer TVs, whatever, it's going to get worse because those tariffs are starting to hit, and we're going to see their effect just coming up because they were hit after a certain time. So they haven't come in yet unless they're stopped, So, I put up another screen there. It's from Redfin News. And I want to talk about mortgage rate because it is so important. I did want to talk about it. So this is from a report from a couple of days ago, August 4th, from Redfin News. It says that the mortgage rate drops to lowest level in 10 months, upping purchasing power in a buyer-friendly market. Okay, Redfin economists say the recent dip in mortgage rates gives some serious house hunters a window of opportunity to lock in a lower monthly housing payment. The daily average mortgage rates dropped to 6.57 on August 4th, the lowest level in 10 months. That means a home buyer on a $3,000 monthly budget has gained roughly $20,000 in purchasing power since May, when the daily average rate hit a peak of 7.8%. What would you say to a buyer on this report? Plus or minus?
I'd say let's go find you one of those incentives, because if it's starting at 6.5, we can get it lower. And you could very well see a mortgage, on a permanent buy down in the fives.
Right.
And I I mean, you've said it. I don't think that we'll be in the fives for quite some time, especially
Uh-huh.
significantly into the fives.
Right.
So it'd be worth every penny of a permanent buy down for sure.
Yeah. The way I see it, and of course, I may be thinking wrong. The way I see it, if you are buying a house and if you think that going from 6.8 to 6.5 is a big deal, personally, if you're my buyer, I'd say, you know what, don't buy. Because if you worry about a couple $100 payment and you stretching and pushing and serving to make shoving to buy a house for $100, $200, $300 payment difference, don't buy. You're not ready. That's what I would tell my buyer. In this market, I would not have said that 5 years ago. This market, I would say it, because if that's a concern, you're living on the edge, I would not buy. Let me give you an example. There's a report out by FHA. For the first time in 5 to 7 years, there has been, and this is only with FHA loans given from 2021 through 2025, there has been up to $2 million, not $2 million, there has been 2 million loans that are either in default or they're delinquent or they're pre-foreclosures. That's not the bad fact. The fact is we have 2 million homes in default, FHA loans. And you know what was common among these loans? Mostly common in these loans? A lot of these loans were given to buyers. I'll give you the number, but Jeremy, what's a good FICO score to buy a loan? What's a good average on the lower side?
Good one?
Yeah,
or a lower?
Average lower end to buy a house.
I mean, I would say 650 to 680 or
okay.
Probably.
So do you know what's common in all those loans that are defaulting up to 2 million defaults? You know what the common factor was?
What?
A lot of these people were given loans under 600 FICO score. And now these are the people that are defaulting. So going back to when I say, if you're worried about your rates dropping from 6.8 to 6.5 to buy a house, you're not ready because you're pushing and shoving. And when that property tax goes up or the interest, the insurance goes up, you're going to start crying or you're not going to be able to afford it.
Or your furnace or AC go out or whatever,
you're done. You're done.
Mm-hmm.
So then you shouldn't buy. You should wait.
And I think that's probably the key to, I have a good buddy who's a lender and he kind of pokes fun at the industry where he's asked every minute what the interest rates are, where early on in his career, it was, every 6 weeks he'd get that question.
Exactly. Yeah.
Right. Like it's because we're pushing the interest rate so much and it's a topic of conversation.
Yeah.
And it's, and that's kind of my point is saying, what interest rate do you want? We'll go find you a house that we can buy one, within reason, and we'll go from there. But I think that the headlines and everything is so focused on the interest rate,
right?
But we're not focused on the affordability rate. And
exactly. Let's look at this paragraph to look at affordability when we're talking about the buyers, right? Let's look at this paragraph, and that's not me talking. This is the report talking. To look at affordability, another way, the monthly mortgage payment on the medium price U.S. home, which goes for roughly $447, is $2,862 with today's average rate. In mid-May, when rates were sitting above 7%, the monthly payment would have been $2,983, over $100 more. So if you worry about that $100 on payment, you are absolutely not ready to buy a house because your property tax, I can guarantee you, is going to go up in the next couple of years on an average place where homes are going up still. So you're definitely not ready and you should not buy. If you worry about $100 on a $3,000 a month payment, that I smell trouble right there. Yeah. And I'm saying that in a nice way. I would like buyers to have a house. My concern is home prices have gone high. Interest rates is high. Property taxes are high. Insurance is high. The home prices have gone up since 2011. It's 2020, almost 2026. 15 years it has gone up. If I had to guess something, and being in real estate for 30 years, there's a good chance in the next 2 to 3 years, home prices are going to go down. So if I'm a buyer worried about a $100 payment, and when my home prices go down and my mortgage payment is going to go up, I'm not going to be able to sell that house because the equity is down. I'm stuck with the loan. And that's why the 2 million home FHA loans are in trouble because it's the buyers like those who bought that house that should not have bought. And the lenders pushed them and shoved them to buy a house when they should have said, you know what, Mr. Buyer, you're not supposed, or Mr. and Mrs. Buyer, you should not buy a house. Nobody told them. They just said, go buy, we'll give you a loan, even if it's 600 FICO score. So I'm pissed at the industry right now because they let them buy those houses. They should have said no. Sorry to say that.
Yep. Yep. And it's, I mean, and that's the key. And owning a home is a responsibility, right? And so you can't buy on hopes and dreams. You got to buy on, comfortability for sure.
If you don't have 20%, if you don't have 5-6 months reserve, if you buy a $3,000 a month payment, and if you're okay that the payment goes at $3,500 in 3 or 4 years, if you don't say yes to those, don't buy. Wait. I have a video coming out hopefully this Sunday, and I'm I'm saying why in today's market, I have reasons for you to why rent is better than owning. I know throughout the real estate industry, renters have been pushed and shoved, say renting is better than buying is better than renting. Renting, you paying other people's mortgage. You don't make money on renting. It has been true until today. That's not true anymore. We are coming to a time, in fact, we are already here, where renting may be better for you if you're stretching your dollars, if you don't have the 20% down, if you're worried about a $200, $300 price increase, then renting is better.
Yep. And I mean, I can't disagree with that. I would say that you're still going to be affected with these increases, with insurance, with all that. That's coming to the rental market. Right. And you're not going to be in an asset that, you can have a more stable situation, because your rent's going up too if all those things go up that significantly. But you're in a year-long commitment versus a 30-year commitment.
Exactly. It's a 30-year commitment. At least, if not 30, you're in a 10-year commitment. If you cannot confidently think that you cannot pay for 10 years, don't buy a house, because the market may tank, and I think it will tank maybe in the next 3 to 4 years, but definitely after 2028, if not before that. And when I say tank, it'll start going down. And that means that your equity will go down. Your payments will still go up because they say, the experts, 100 from HSES, Home Survey Economic Survey. Yeah, Home Statistics Economic Survey, HSES, which is a group of 100 experts. They're saying that the prices are going up till 2028. So if you buy today, there's a good chance your property tax will go up and up and up, because as home values go up, your property taxes go up. So if your mortgage is $3,000 right now, it's going to be up to $3,500 by the time 2028 hits. So if you can't afford very easily higher payments, don't buy right now. Go rent. You're better off renting. Today, in today's market, if you look at all these factors, renting is cheaper than buying. You have no maintenance cost. You can put that 20% down into a stock market or a mutual fund, and you'll see the long-term growth. You don't have property taxes. You don't have insurance. You don't have repairs. You can save all that money. So hopefully that makes sense.
Yep. And I think, certainly it's time to really look at the budget and plan that way and plan accordingly. Because, I always talk to my clients about, yes, the lender is going to give you an amount that's going to land you at a 50% debt to income ratio. Ask them what the mortgage payment is. Make sure you're comfortable in that payment. Make sure you're comfortable in that payment flexing a little bit because of taxes and insurance.
Right.
And we'll be ready to roll.
Right. Well, for those of you watching, if you have any questions, please put them up here. We'll answer it. If you're watching this recording after this live is over, and if you have any comments or questions, put it out there. We'll answer your questions. If you need to talk to somebody in Denver, Jeremy will be glad to talk to you or refer you somebody there. But if you need a realtor or lender or somebody to talk to, see what's happening, what I should do, what I should not do, blah, blah, blah. Very important you talk to a realtor. I'll be glad to refer you to one who knows what they're talking about, who's experienced, who knows the market trends. On that note, I want to talk about some final takeaways. Maybe we'll spend 5 minutes on this. And 3 things I wrote down in preparation to, and then let's talk about those. The first thing is the market isn't crashing, it is shifting. The second thing I wrote down is that sellers must be proactive, strategic, and realistic if they're thinking about moving or selling. And then if the rates fall, the competition will heat up quickly and the prices may go up. Do you want to discuss anything from there, Jeremy?
Yeah, I mean, I think that's the nature of the supply and demand, the balance of the market with prices going up. I think we've seen over the last, what, 20 years, we've seen the lowest of lows and the highest of booms, right? And so it's just all about the comfortability in the cost of owning the home. There may be a time where it does, quote unquote, tank or crash, which, I mean, a crash is like 10% down or something. I think it's been defined as, well, we went 20 some percent up for a couple years in a row,
Yeah,
in
that
my
was
market.
unheard of. That was
I
unheard
think it
of.
was
Yeah.
15% or something. So we've seen that, and
Mhm.
we have to step back and understand this is a long-term play.
Right.
If you're in real estate to get rich quick, there's a lot of different options and investor groups you can be a part of, and you can play that game. But holding on, right? I think this is what I talk to and I coach my clients on all the time is understand that yes, the market may change, the market will shift, hopefully, if you're buying this home. But if you don't sell when it's bad, it will come back, right? Your property's worth double,
Mhm.
200% more than it was, pre 2008. We're getting further and further, so that stat isn't quite as
Right.
impressive as it was,
Mhm.
8 years ago. But if you can fill that void, if you can pay that mortgage payment, if you have to rent it out and pay a couple $100 a month, in the negative so that you can hold on to that mortgage because you can't live there or whatever, hold on to that mortgage through that and you will thank yourself as you go.
Right. Yeah. I mean, there's talks about, in one of the videos that I did, I talked about one of the things the sellers can do if they have a 3 or 4 bedrooms, and the one room is vacant or the basement is empty, rent it out, make some money.
Mm.
If you short $400, $500 a month or a couple of $100 a month, rent out. I know in Orange County, I can easily rent a room easily for $800 a month with these conditions. You park on the street, not on the driveway. You don't use my kitchen and you don't use my backyard. Even if I put those stipulations, I can get 800 easy. If I let them use my kitchen and my garage and use my backyard, which I won't do, but in general, if I had to, I could get $1,000, 1,500 per room. So if I'm struggling and if I have a house, 3 bedroom, and if I can rent it out, or if you can convert the garage to an ADU in California, now they're making it legal to convert the garage to a livable condition and rent it out legally. It used to be illegal. Now it's pretty much legal in certain areas. I can even build or buy a tiny home and pop it in my backyard and rent it out. So there's things you can do if you're a seller struggling to make payments, or if you're behind on payments. Talk to your realtor, direct message me. I'll give you some ideas. I'll send you some videos that'll give you some ideas of what you can do to stop the quote. I hate to use the word stop the bleeding. There's a lot of things you can do. You can appeal the property taxes. You can find a lower insurance payment. Shop around. Are you getting your exemptions? If you're a VA, if you're a senior, are you getting your tax breaks and your exemptions? A lot of things you can do. So, the market is not crashing, but 100%, it is not shifting. It has already shifted.
Mm-hmm.
You
And
don't.
we could see with the uncertainty how that goes. And that's a good point. And a lot of people, and we can finish with this, a lot of people hide that, right? They hide the fact that they're struggling. They hide the fact that they're not making that payment because it's not the easiest call to make. I get it. However, if you call somebody that has your best interest in mind and can help you with ideas and strategies, we can do a lot more on day 1 of the problem than day 180,
Yeah.
right? Day
Once you deep into
180,
it. Yeah.
yep. Foreclosure sale,
Oh yeah.
forbearances down the road, whatever. Our options and your options are a lot less.
Right.
Whereas
Right.
if you're ahead of it and you can, put a Band-Aid on it and figure it out,
Right.
we have more options on the front end. So don't
Right.
be shy. I would
Right.
love nothing more than to help anybody, stay out of that financial stress because
Exactly.
it is quite that.
Absolutely.
So don't wait. I mean, I've had sellers call me 20 days from foreclosure
Oh,
and but the truth is we put it together. She walked away with $400,000 check
wow.
that she would have lost had she not called me 20 days. But that was a great market. That was easy. That was quick. You know, it's a very different market now. Had she called me now, it would have been a lot different scenario because we couldn't just put it on the market and sell it. The attorney wouldn't have delayed the sale and all the things. And so the sooner you can reach out and talk to a professional and actually understand your options, the better you'll be.
Yeah. And you brought up a very good point, which we should mention, but I'm going to mention this point, but I want to go back. One of the reasons sellers were in trouble, we mentioned were in trouble. One of the reasons was a lot of them refinanced to buy a boat, to buy an elephant, to buy a horse, to remodel, whatever. So that's there. If they did not refinance because they want to keep that 3%, a lot of people took HELOC loans. I personally referred 3 homeowners to HELOC loans, which is the home equity line of credit. They pulled the money and then painted the house and did whatever, you know. So what happened was the equity dropped again because they borrowed and they bought horses and boats and remodeled and went on a vacation, which you're not supposed to do. So that was another thing. Going back to equity, and you mentioned that you had a person almost lost a house in foreclosure. I'm talking to one person right now. She's behind on payments, right? And she wants to let go of the house. And I asked her, how much do you own the house? She said about $450,000. I did some math. Her house is worth $800,000. So I said, you know what? You are behind. Don't lose your house. Hang on. Make the payments. Even if I sell your house, I'll give you a check for $200,000, $300,000. And she didn't realize that she has so much equity. How could you not realize that? Well, she didn't. I'm not going to be judgmental on that. So just because you're behind on payments, don't sell the house, because I would say 80% of the homeowners out there have a lot of equity. So even if you're behind 6 months, 7 months, a year, you can still sell your house and we can give you a check in your hand.
Yep. Instead of giving that check right to the bank.
Yeah. This is the difference between the 2008 crash. There was zero equity. So if you were behind, I'll use the word, you were screwed. This time, if you're behind, you're not screwed. So before you do anything, talk to a lender, talk to a realtor, talk to your accountant, talk to your professional. Don't lose the equity in your house just because you're behind on those payments, including all those FHA buyers that I talked about. A lot of them have equity. If they bought in 2021 to 2022, let's say for $300,000, their house is at least worth $350,000. So even if they're behind 3, 4, 5 months, they got equity. By the time they sell, pay the closing cost, pay the commissions, they'll walk out with at least $5,000, $10,000, $15,000. So don't let that go.
Yep, absolutely.
That's what we call a shifting market. The market has shifted. It's not coming. It's already shifted. Be smart. If you have any questions, hit us up. Hit up Jeremy. His description is in his YouTube channel, and his name is in the description of this video. Look it up. You have my number or my contact info. I'll refer you to somebody if you're in trouble or if you need information, if you need guidance. Thanks for watching. We'll see you again Tuesday at 5 o'clock California time. And special thanks to Jeremy. You had some great insights.
Yep.
Thanks everybody.
Mike. We'll see you next time.
Bye-bye.